Pankaj Mital joins us now, Chief Operating Officer, and along with him you got Kunal Malani, the CFO of SML International, that is Samvardhana Mothers and Sumi. Gentlemen, good morning. Thank you for joining us. Firstly, let's talk about the debt levels, because your numbers look good, but there has been an unexpected increase in your debt levels. How do you see this number moving ahead, and how much can we see this number coming down in H2?
We had a very strong performance, registering high double-digit growth while the automotive industry remained flat. And yet, despite having large M&A payouts and growth capex, our leverage ratio is at 1.5x. So this is a kind of financial prudence which has resulted in such a performance. And also, this is reflected in the ratings upgrades by Moody's, Fitch, CRISIL, and also the first-time ratings by the Japanese credit rating agencies. So we have to see our debt in this context. And going forward, of course, the whole idea is that as we continue to improve upon our working capital, yet with the growth coming in, we would need to see in context of our multiples in terms of the leverage ratio.
So if I might add, there are multiple levers for us to believe that in H2 things should improve. For one, I think, as you may have noticed, we have a fairly large order book of 83.4 billion that we announced last quarter. Against that, a lot of the new orders are expected to kickstart, for which the investments are happening now. But as those kickstart and the SOP happens, those inventories get liquidated, and hence we expect a release to happen. At the same time, I think this time around, we had built in a fair amount of inventories on expectations of possibly let's say, a more impactful crisis around the Red Sea piece, which also seems to have not been really required, and hence over a period at least, that should also start normalizing.
Right. Morning. Now, Pankaj, I wanted to understand how you're assessing the demand scenario in the end market, because back home in India, PV is expected to show muted growth year on year. Even in the international market, there are concerns about EV sales. So is that going to be a lingering worry?
Well, as far as the end markets are concerned, we do see muted growth. We have seen flat growth as of now. Yet in the emerging economies, the growth has been there. So India has shown growth, China has shown growth, and you would see that our growth capex is in the emerging markets. So we do see that in the short to medium term, the growth is there because new and new models are getting launched. And in terms of developed economies, yes, there are reports which do suggest muted growth or a little bit of flattish or slight downtrend in some of the geographies. As an OEM supplier, we remain prepared to handle these situations. But as SAMIL, on an overall basis, if you see the model of business which we have is quite de-risked. We are 3CX10. While we work towards that, we are into multiple geographies, so no country, component, and customer being more than 10%. Also, we are growing significantly in the non-automotive business, also at the behest of our customers. So that's a kind of model which we have created, which give us a very strong sense of growth over long periods of time.
Okay, Kunal, but I also wanted to kind of touch upon the acquisitions because you've pretty much completed all the acquisitions that were there in the pipeline. Going forward, what's the capex? Because you announced almost 5,000 crore capex plan in FY25. How much have you done? How much further to go?
Look, last quarter we had highlighted our total capex guidance for this year was expected to be 5,000 crores plus minus 10%. While we are re-evaluating this number in light of some of the increased business perimeter, as you know, we have acquired Yachiyo Lumen Industries and ADI Industries in this quarter. So while we will reassess that requirement, but right now with where things stand, I think we should still be somewhere between the 5,000 plus minus 10% levels itself. This quarter, we have done around about 1,070, 1,080 odd crores. So actually been a little bit lower from a run rate perspective than what that guidance is. But yes, overall, I think we should hopefully be able to manage it within the 5,000 plus minus 10%.
Kunal, the company did inform that the aerospace business is going to be the next big area of interest. So what's the progress in terms of setting up facilities, assessing the various products here?
Sure, we're setting up 2 new greenfields on the aerospace side. Both of them are coming in India. We also this time acquired ADI Industries in France, which is making structural parts for the LEAP engine particularly, and hence an extremely strategic supplier to both Airbus and Boeing. So structurally today, we should possibly be one of the largest players out of India on the aerospace side. Having said so, it's early days on the ADI piece that we have just acquired. So we're in the process of integrating the same. But if history is anything to go by, when we acquired Sim Tools in 2022, it was around about a 150, 160 million order book. Today it is closer to the 400 million mark. And hence is highlighting the incremental growth that can be added, once a more stronger player comes into the market. So we do hope that we are able to grow the order book of the aggregate business as well. It should be more than $1 billion plus right now. And hopefully, as we integrate the asset, we are able to grow this much better going ahead.
Sure. And going forward, what's the overall outlook on the acquisition pipeline? Anything which is at an advanced stage, Kunal?
We keep looking at opportunities. In fact, to your earlier question also on what happens if the markets are soft, the reality is acquisitions actually become that much more interesting for us in that market. We will hopefully get assets at much better terms. Having said so, look, I think internationally the pain continues because there is excess capacity, specifically in the developed markets. Inflationary pressures are also making sure that many of these assets will need to get recalibrated to meet the growing demands of how the product mix or the production mix is changing between emerging and developed markets, and hence frankly a good time on the M&A side. Having said so, we've been pragmatic of it in the past as well, of not gunning after anything. We wait to react to what the customer tells us is what is important for them, and that's the set that we will be looking out for. But yeah, it remains an extremely active space for us, and hope we come back with some more sooner than later.
All right, gentlemen, thank you so much for taking time out and sharing with us the vision and what the growth outlook is for the company.
If you like this video, then like, share and subscribe to ET Now.